Hello. Welcome to February. Or I should say, welcome to February. It's already February 1st. And thank you for checking out my video. Thank you for stopping by. Thank you for giving me a few minutes of your time. Today, I'm super excited and looking forward to talking about survivors' benefits as it relates to the mortgage industry. And we've been hearing how if we just stuck it out, if we just made it through the downturn, we would all receive, the ones that stayed, the survivors' benefits. So I want to talk about a little bit what that means and what it's like. And as part of that, I want to share a recent LinkedIn post by Tyler Hodgson from NXT Mortgage. He did a great post on this. We'll talk a little bit about Angela Duckworth's grit and maybe a couple other things. So here's the first thing. So we've seen the mortgage volume go from a peak of about $4.4 trillion in 2021 to just like $1.67 trillion in 2023. That's a massive drop in volume, a 60% plus drop in volume, and all the things that happen with that. You know, the margin compression and unbelievable competition and incomes were dropping, all the things you would expect, overcapacity, layoffs, people leaving the industry, just a lot of carnage with that fast a volume fall. But if you stayed, if you weathered the storm, then what happened, the very best thing that happened is if you grinded through that, is you got what Angela Duckworth called grit. That grit, and I'll show a picture of her book, the grit, the power of passion and perseverance is you got better. You got a lot better. Because you had to fight harder for every loan. Consumers demanded more. They had more choices. You had no choice but to survive to get better. And so you got far better. So you already have, just by being in the business still, you've already gained the survivor's benefits. Because I guarantee you, you're far better today. Your skill set, your value is better today than it was 4 or 5 years ago. So congratulations. Great job. But that's not the only thing that's happened. That's not the only benefit that has happened. I did a talk a few years ago, and the name of the talk was Survivors Benefits. And I anchored that talk with this slide right here. And what I told the audience when I was going through this, I said, look, the most important number in this equation for volume is the denominator, not the numerator. And the numerator is total volume. But the denominator is participants, those people that are dividing up the volume. And I said, and this was back in 2021, and what I said is don't worry about volume dropping by 50, 60, or 70%. Pay attention to the amount of participants chasing that volume. Because the survivor's benefit, the equation, the formula will fall in your favor. And it certainly has. It has in quite a bit of ways. So as we've benefited now, we're much better, we're more skilled, we're tougher, right? We're more valuable, but now the formula of actual success and volume is falling our way. And this is what, as I mentioned, this is what Tyler did a great job with in his post in LinkedIn. I want to share his post because I certainly want to give credit to that give the credit for the post to him. And you may or may not be able to see this full thing, but he essentially argues, and the key part is this graph in the bottom. So in this thing in the bottom, he tracks the annual origination volume, then he divides it by productive LOs. And here's what the definition of productive LOs, and this data was provided by RETR Data. I'm not familiar with that company, but great. But he divided by productive LOs. And productive LOs are defined as a loan officer that has done one loan in the past 12 months. And so what he says in his LinkedIn post, he goes, look, we peaked at about 288,000 productive LOs in 2021. And that number has now dropped to 195,000. And so, that drop in volume has then resulted in a drop in headcount has resulted in massive increases for the loan officers that have stayed. So he said in his post, he said, look, in 2023, the average loan officer, just taking total volume divided by productive loan officers, increased by 18%. And then he went on to say, if we hit the projected volume that the NBA has forecasted when he did this was $2.3 trillion, it's now been revised to 2.0. But regardless, if we take the forecasted volume divided by the participants, those are the number of productive LOs, we should see, every loan officer should see a 42% increase in their business this year. That's fantastic. That's the survivor's benefit. That's the numerator divided by the denominator. The denominator is falling faster than, and now the numerator is increasing. So the total advantage is to the loan officers that stayed. But here's something really interesting. And this is probably the most important about today's video. It's true that volume will probably be up 35, 40%, but it's not going to be evenly spread amongst every loan officer. Because the fact is, the consumer is demanding more today. They want more value, they want more service, they want more advice, they just want more. And the loan officers that have learned how to deliver that, that competitive value, that unbelievable, experience to the customer, they're going to win more customers. And so if you look at Pareto's principle, where we used to think that, look, 20% of the people got 80% of the business, that's changing. That's shifting to like 15% of the participants are getting 85% of the business, or 10% are getting 90%. The people that are good to great are getting more and more share of the business. And unfortunately, the people that are mediocre to bad are not getting any business, right? And so you may be a loan officer, and the first thing you have to check is, hey, did my business increase 20% last year? If it didn't, I could possibly be subpar on the value equation, and I need to get radically better to compete. And if I do, then I'll start to experience the benefits of this, larger market. Same thing, if you don't think you're going to get a 40% increase this year, you got to go, if the industry is going to get it and I'm not, there has to be something that I can do to get better to earn this business. And that's the thing I want you to think about. If you're good to great, you're going to feel all these benefits. If you're mediocre to subpar, you're not going to receive these benefits. But if that's the end of the scale you are, right? And be honest when you look at yourself and let your numbers tell you, right? We all think we're above average. We all think, that was at the Lake Winnebago or whatever lake effect. We all believe our kids are above average. But let your numbers tell you. If your numbers aren't tracking what the industry is, you're probably on the bottom half of that value scale, and then just commit to getting better. Get better with your words and your scripts. Get better with your advice and your consultation, with your knowledge. And you can have these benefits too. But the good news is Survivor's benefits are here in 2025. So congratulations for still being here. I guarantee you're much better than you were. We all are 4 or 5 years ago after we've now grind through this market. The numbers are looking great. They're in our favor. Keep grinding, keep getting better. Get your unfair share of the business. That's my encouragement for you. I did a post on this in LinkedIn today. I'm happy with the post. I talk about these things. Check it out. I also put in my post a link to Tyler's original post because I certainly want to give him credit. He did great on this. So Tyler, if you hear this, great job. And that's it, everybody. I hope you are off to a great start to February. Can you believe it's already February? But I hope you're off to a great start to February. I hope you go out there and you go get those benefits. Thanks so much for spending a couple minutes with you. I look forward to talking again soon.